Good afternoon. Today is the day when the budget got presented by the finance minister, a record seventh time, and we are here as Grant Thornton Bharat to discuss our views, comments, insights on the economic survey and the budget that was presented by the Honorable Finance Minister this afternoon or earlier today. The themes in the budget: long-term, development-focused, inclusive, sustainable, reform-oriented, high-tech. I think the FM has tried to cover lots of themes in this budget: put more money in the hands of the people, allocation to infrastructure development, employment-led incentives, covering farmers, women, MSMEs, regions of the country, talked about energy security, how do we create climate resilient infrastructure, enhancing the ease of doing business, whether it is through more capacity for IBC, setting up industrial parks, reduction in MNC tax, winding up of LLPs, using technologies in traditional sectors such as agri, healthcare, also development of digital infra. At Grant Thornton Bharat, at the center of our vision is to shape a more vibrant country. There are some themes that we like to focus and influence. It's about climate, energy transition, inclusion, regulatory, foreign direct investment, private capital, AI and tech. We believe the budget as presented today covered all these themes. I will now invite our Chief Executive Officer, Vishesh Chindyok, to share his views on the economic survey and Finance Minister's budget speech.
Well, good afternoon, ladies and gentlemen. I guess we are 24 hours or under 24 hours away from having seen the economic survey. I've not even read the budget document yet. And I think all I can say is the budget that I saw was extremely comprehensive. It touched pretty much on all the priorities that were laid out in the economic survey, which gave us the direction to look at. So what were the top things I saw in that economic survey? First of all, the opening statement around growth, how whilst the IMD's prediction on monsoons was perhaps a bit optimistic, and the monsoon is going to be more varied than what one initially thought, 6.5% to 7% growth is what they are targeting, even though the various agencies that predict GDP growth are closer to 7 to 8% growth. The question people will ask is, should the planning agencies be cautiously optimistic, or should they have been going for a bigger aspiration of growth? I think what the second thing from the economic survey very clearly was on MSMEs, and indeed the word was used, Indian Mittelstand. Now, at Grant Thornton Bharat, we've been saying for a long time the need to address that missing middle. 99.4% of our MSMEs are micro enterprises. There are, of course, 5,000 or 6,000 large enterprises in the country. But out of 6 million enterprises overall, where is the middle? That missing middle is what needs to be addressed, and the economic survey, talked about that, comparing to the German Mittelstand, which has been such a central part of their evolution and then development as a manufacturing powerhouse. The third big theme in the economic survey was around jobs. The need to create those 8 million jobs well into the future. They projected up to 2036. Nothing new for all of us, but not just addressing education, but also that big question of skilling. The fourth aspect was around agriculture. All of us know the problems in agriculture. How do we address that fragmented land holding, where 60% plus land holding is under 2 hectares in the country, and the low yields in agriculture. And lastly, an interesting new theme in the economic survey on over-financialization and the risks that poses if retail investors, new investors start dabbling in fancy financial products, the risk it poses, the comparison was with the Asian financial crisis in the economic survey by the CEA. And I think the budget today addressed all those things, of course, on growth, continuing with that infra spend, on jobs, bringing in that employment-linked incentive, on, the MSMEs, both the credit guarantee scheme, 100 crore, up to 100 crore investment in plant and machinery, the SMA accounts, special mention accounts when MSMEs get into trouble, the Mudra being doubled from 10 to 20 lakhs, several things around MSMEs. But again, at Pranton Bharat, we believe we need a new category, not just MSMEs, but aspirational companies, Atmanirbhar companies, between 200 crores and perhaps 4,000 crore companies. How do we create that new category? On jobs, of course, quite central, a directional shift with the new employment-linked incentive scheme, both money in the pockets of the employee as well as the employer being announced. On agriculture, leveraging digital, as you just heard also, again backing the move towards new kinds of crops, shrimps, fisheries, aquaculture, which has such a significant potential of exports, receiving special mention, special incentives even on customs duties. And then on that over-financialization, we saw that immediately being addressed with both some of the capital gains tax announcements, as also enhancement of STT, or security transaction tax, on futures and options. So really a very comprehensive budget. I could talk about it perhaps for the entire duration of this hour, but you have various domain experts and sector experts, both on the panel and virtually, who will be joining you to tell you more. I can only say, the budget used to be more of a tax event. We used to be more of a tax, compliance firm, just like we have evolved now much more into a premium consulting firm versus just a tax compliance firm. India and the budget has also evolved. It is much more an economic exercise, a directional exercise. That's not just an annual policy statement, but something that tells us what to expect over the next 5 years. Thank you.
Thank you, Vishesh. I think the word directional, this budget is supremely directional. It is long-term, as I stated above. It is something that is going to impact a very broad part of the country, the population. I'm going to, stick to the themes that we are trying to influence, and I'm going to ask my colleague Amit Kumar, who's our climate and energy transition leader. Amit, what were the key announcements relating to climate and broader infrastructure? Your thoughts on that?
Thanks, Ed. Government has continued the path of energy transition and the climate resilient economy, if I can use that word. Even on the power supply side, one finds that they are promoting advanced ultra supercritical, which is the most advanced, coal-based power plant setup anywhere in the world. So they are saying 800 megawatt of NTPC BHEL, JV will set up this 800 megawatt. What it will do, it will create an ecosystem for coal-based power plant coming up. As we all know that 500 gigawatt is what the renewable capacity is to be installed. At the same time, the filler coming from the coal-based power plant will also be the most energy efficient globally. That's a very big announcement, and India has taken a leap towards that. Second aspect is that government is involving the private sector in development of nuclear power. Nuclear power is where the government's intention has been clear over the years, but for the first time the government has said, we will involve private sector to develop a small scale nuclear reactors, which are latest, again, state of the art technology. That's on the supply side. This budget also touches very clearly on the roadmap for renewable energy. For example, they are saying carrying forward from 1 crore households to be covered for a large scale rooftop program. The government has announced that more than, I think, 1.28 lakh households have registered for this program, out of which 14 lakh has been identified. Similarly, on offshore wind, which is a new technology, even for India, the cost of generation from the offshore wind is going to be high. So what the government has announced, we are going to provide incentive a viable gap funding for development of this technology going forward. Because you can't put all your eggs in one basket, which is solar. So that's why they are diversifying the whole ecosystem and the renewable side of it. Again, while renewable energy will be, enhanced and it will be merged into the grid, what is required? Mainstreaming of this renewable energy. How it will be done? They are saying two steps. One, pumped storage system. So that means the government is going to come out with a comprehensive policy document which will include obviously the incentive or a viability gap funding for pumped storage system throughout the country. We know there have been some feasibility studies carried out in southern states, but I think there is a composite program required for mainstreaming of 500 gigawatt renewables in the next 3-4 years. Not only this, now for the first time government is saying we are going to enhance critical mineral availability in the country. How it will be done? They are saying that basic custom duty will be reduced. There will be no custom duty on some of the critical minerals, as the finance minister said that lithium, copper and cobalt are some of those. These are required for manufacturing of advanced chemistry cell battery system in the country. Government came out with the PLI scheme. The PLI scheme on the battery will only be successful now that this has come in. So they are creating the ecosystem for supply, both from the conventional power, also from the renewable system, and third, and the most important, energy efficiency. What have they done? They are saying that all the hard to abate sectors, means where the energy is like a raw material, aluminium, steel, fertilizer, pulp and paper, they will move from energy efficiency system, PAT program, Perform Achievement Trade program as it was called, to a carbon credit trading scheme. This will be rolled out. Most of the works is already done. So I think energy efficiency renewable system will transform into a carbon credit so that it will be a widespread dissemination and more players can participate in this. Why this whole system is being created? India, as we all know, has announced 2070 net zero. Now if you do the backward calculation, steps are to be taken now. Industries, supply side, consumers, life program of the Honorable Prime Minister Vizian. So it is a complete ecosystem which is being developed around this. I think more will come when we come to know about as to how much VGF or the incentive for offshore wind or battery or the critical minerals, but these are very large transformational programs as I put it. Now, besides this, the finance minister also announced, there was just a statement, but very important one is that climate finance taxonomy. There are few countries in Southeast Asia, some of the developed countries who have announced programs and schemes around it. Finance minister said that to enhance availability of capital for climate mitigation and adaptation, this climate finance taxonomy program will be rolled out. We know there have been green bonds program which have been, which have come out, say PFC or IREDA, but I think this will be again widespread. More and more organizations, both from government and the private sector, will participate, and it will be redirected towards the low-hanging fruit to start with, and then move on to the other sectors. I'll touch upon, Sid, as you said, on the infrastructure side of it. Infrastructure, the focus is continuing to be on the urban, but more so in the rural side of it. For example, the government said that 2.66 lakh crores or rural development and infrastructure will be created. This is the need of the hour, because you need to create roads, you need to create other infrastructure in the rural areas. That's what will be given a push this time. There will be a 3 lakh crore rural Awas Yojana, which essentially means that housing scheme for rural people. And I think not only the urban area, but the rural dwellings will also be developed at the end of it. Now, as we all know, that investments on a large scale has been announced in 2-3 states, which include Bihar, which includes AP and also Assam. So 26,000 crores of highways have been announced covering these 2 states. Airports, sports infra and medical colleges, which again is required for the state of Bihar, that has been announced. Importantly, industrial park has been a success story in the country. So government, taking a cue from there, has announced 12 industrial parks, which we all know is like a plug and play system. Government is creating the infrastructure, inviting the private sector to set up their base, set up their manufacturing base and create employment. Now the more details will come out, but this has been quite a successful, at that. I will also touch upon the climate resilient infrastructure. The government has mentioned a bit about it in the budget, and that is what is required now. Flood control and management around the Kosi River in Bihar or in Brahmaputra, 11,500 crore in Bihar And finance minister has not announced the number, but I think an equal amount in Bihar, HP and Uttarakhand. Why this is required? This is required because we have seen in the past, because of flood and natural calamities, lot of damage to the infrastructure. Now power and other general infrastructure, there needs to be an investment in this scheme. I'll give you an example. Overhead cables need to be replaced by underground cables. That is one of the examples. So this has been attempted in Odisha and some of the coastal areas, but that is where the government focus going forward will be, particularly in coastal areas and also hilly areas. I'll stop at that and hand over to you, Sid.
Yeah, thanks, Amit. You know, staying with the government, I think I talked about the themes that we want to influence: ease of doing business, regulatory, but you use the word transformational. Is this budget aiming towards the transformation of India into Viksit Bharat? I want to bring in Ramendra Verma, our government sector leader. Ramendra, what are the, few, 3-4 areas that stood out for you from this budget?
Thanks, Ed. Good afternoon, everyone. I think this budget was largely providing continuity to the previous budget and especially the interim budget. Having said so, I think there are a few areas where the finance minister has tried to, sort of give some innovation there. I think one of the largest problems which the government faces today is the issue of unemployment. And in this, the finance minister has tried to get in the private sector involved in generation of the employment. I think this is a very tough task. It's a challenging task because in this, the major announcements have been that there will be 1 month of wages being given to 2.1 crore youths. Now that's a big number. Then the EPFO contribution for 2 years up till 3,000 rupees per month. So overall, if you see, it will be 2.5 to 3 crores of people, which means affecting lives of roughly 12 to 15 crore people. This is a very big number. And how this happens is something which the government has tried in this, and I will talk about it, but it will require a lot of convergence of various departments and government agencies to do it. So one part is definitely giving that financial assistance to the private sector to invite the youths and them involving them in their employment. The second part is, if you see across, the government has also tried to generate a lot of self-employment through the cluster development. There have been focus on giving out loans to the given out to the loans, and in fact SIDB's number of branches are going to increase. They are also trying to fit in the ecosystem by providing housing facilities through rentals and through dormitories in these clusters. So a lot of focus is being done, lot of things are being attempted to be done creating that ecosystem. But I think the proof in the pudding will lie in actually when you are making those convergence happening, so that those people whom we are rolling out the employment, they are gainfully employed without the private sector, this becoming a load for the private sector. That's very important, because while government is trying to push it off to the private sector also should be looking at them as adding value to them. So that's definitely one part. I think the other part is, which has come out very clearly, is in terms of the rural areas, how they are trying to push the benefits of digital in the rural areas. First of all, they are talking about using drones for the survey of the crops. They are also talking about the IT system which will be involved in generating of the various reports. Digitization of cadastral map, that's an immense exercise. It's too big to be completed in the 5 years. The land record digitization itself took around 20 years to happen, and that too in a normal database. Digitizing cadastral maps is a massive exercise, and this should be giving fillip to the IT industry as such. Registry of and land records registry, that's another thing. One important thing which has been talked about is Bhu Aadhaar, which is the unique ID for land parcels. That's also something which will help in taking care of various court cases and various litigation happening in the rural areas. Then we are talking about the e-commerce export hub being generated. So these are all initiatives which are leading to professionalization of various things, especially in the rural areas. So these are two important things said, which I think is giving a directional change. Overall, I think it has been a directional budget. If I look at a lot of things which are very important from the industry side has been left for the next 6 months to 1 year to get it finalized, specifically next generation reforms. I think the industry was looking at financial reforms after Manmohan Singh. Probably this was the time when we were expecting that huge amount of financial reforms will be announced. I think we'll have to wait for another 6 months to do that. Then there are other things related to FDI or land related reforms or labor related reforms or EODB through Jan Vishwas bill, VGF in infra. I mean, these are all things, in fact, comprehensive review of custom tax. These are all things which are very important, but at this stage, I think we just got a glimpse of it. I think in the next 6 months, we'll see more of it. Sid.
Thanks, Ramendra. I think, again, lots of good things, but a lot of detail is required. I think we are all eagerly going to await the detail behind some of these announcements, which are long-term directional. I think one of the things I'll just add on, this whole employment-linked incentives and creation of jobs. The chartered accountancy community, honestly, the Madam FM seems to have taken a leaf out of their book about internships, and it's a great idea to bring people into formal employment through experience with organizations. I would say that that is one profession which has historically taken interns and then trained them to become employable and have long-term sustainable careers. Staying on financial services, I'm going to now invite Vivek Iyer, our financial services leader. And Vivek, do you think enough has been done from an FS sector perspective, given that's the grease that the economy runs on? Your views, please.
So, a couple of things that have been really interesting from a from a budget standpoint has essentially been around the whole MSME space, the Indian Mittelstand, as Vishesh also mentioned. 3 points: access to credit, liquidity, and resolution. These are the 3 themes they focused on. Access to credit is basically telling the public sector banks that you no longer will rely on mainstream data, but you will develop your own credit scoring models based on alternate data, based on the digital footprints of these MSMEs.
Vivek, sorry, I have to interrupt that so the audience don't miss anything that you say.
So I'll go again. 3 points from a MSME standpoint that were useful: access to credit, liquidity, and resolution. From an access to credit standpoint, the Indian public sector banks have been actually asked to develop their own credit scoring models based on digital footprints of MSMEs, so that credit underwriting can be more focused and quality of credit can be better, as well as more credit can be provided. Second, liquidity. Using the trade receivable and discounting platform and opening it up to a larger set of participants for buying receivables helps provide a greater amount of liquidity to the MSMEs. And the third piece on resolution, which is essentially in terms of regulatory forbearance being provided for those stressed assets for these MSMEs that actually fall into the special mention account category, and where they fall into the stressed assets due to circumstances beyond their control, to actually help them get through that. This is one of the first regulatory forbearances that have actually been provided from an MSME standpoint. So it's a pretty interesting initiative in terms of how they're looking at the MSME space. From a banking standpoint, something that has been interesting, especially for foreign banks, given that, from a Grant Thornton Bharat standpoint, we have always been focused on contributing towards a Vibrant Bharat initiative. And one of the reports that we released 2 years back focused on how rationalization of tax rates for foreign banks could really help the country benefit more. Seeing the rationalization of tax rate from 40% to 35% is a step in the right direction. Couple of other initiatives from a whole capital market standpoint. There was this whole worry of over-financialization of capital markets, which is where the whole security transaction tax to discourage the investments in the F&O segment. the focus is very simple. They want the investors to focus long term, which is also why the national pension scheme has been elaborated to cover a larger set of people. So since the child is born, you can actually make investments, which allows us to have a broader asset base. They want people to save for the longer term and not take a short term approach. Couple of other initiatives from a digital public infrastructure standpoint, especially from a land and a land registry and a farmer registry standpoint, helps to create far more mainstream data for the purpose of effective credit underwriting. That is genuinely going to help a lot of financial institutions to be able to lend better. Goes very well in line with why they expect SIDBI to actually increase the number of centers so that they could actually extend direct credit to customers. These are some points from a financial services standpoint that were there. While always we would love, to want more, and while we would have loved to see some bit of more announcements on regulatory framework around AI, more around insurance, essentially around risk-based capital and solvency. But we are pretty sure that given the way the principles have been laid down for building a sustainable growth trajectory, we are sure that these aspects will be addressed as we move forward.
Thank you, Vivek, for those comments. I think again, directional, the middle market, middle stand, as Vishesh said, the financial service direction to that is clear. I think that's going to spur growth of the middle market. I think I just want to take a step back and, my own focus being on the India-US corridor. One of the things that the economic survey talked about, but Madam Finance Minister maybe did not allude to it, is the growth of the global capability centers in India, which have been driving a lot of employment generation, export of services. Brand India was known as the office of the world. I think that Brand India has moved up from just providing cheap talent to actually core capability to the world. United States, a key trading partner within India, will be one of the biggest in continuing investors in setting up GCCs. These are big US corporates and now mid-sized US corporates who are locating their global capability centers in India. I would have liked to see a little bit more on that, but I'm sure there is more in the detail. I think staying on that FDI, I think, again, there is some things on Vishesh. You'd like to add something?
No, I just want to say, I think, of course, as everybody said, this is a directional budget. It's doubling down on the past themes and the past bets of Modi 1.0 and 2.0. They've not used the word make in India, but it's bets on manufacturing to create jobs, better skilling and employment at the bottom of the pyramid. I've made this point that services and tech, and the economic survey, as you also said, makes that point, will face headwinds both from geopolitical events across the world, economic slowdown in the Western markets, as well as the advent of technology like AI. And we should not take services exports for granted, and we also need to create adequate schemes that will continue to incentivize those services exports and continue to attract companies to India, services companies, through things like GCCs, what you just mentioned.
Yeah, absolutely, Vishesh. I think that's the, as I said, our forum, it's important to speak out, and we will, also talk to the policymakers that we should not ignore the services sector. It is a brand that globally is very strong for us, and we continue to build on that. And what can we do more for that? I think one of the things, abolishment of angel tax, right? Is that the angel that India needed? I'm going to invite one of my colleagues who's on Zoom with us, Pallavi Joshi Bakru, who focuses on private capital.
Hi, Stark. I think you all were just talking about how there's been a huge push on creating jobs, making sure that entrepreneurship is encouraged in the country. And I think angel tax has been a major overhang on private companies to raise capital. I mean, just for the benefit of listeners, I'll do a quick recap. So when private companies would raise capital, if the fair market value of the company was less than the issue price of the shares, it was treated as income in the hands of the person raising the capital, and a 30% tax was levied. I mean, that really sort of was a huge detriment from allowing, smaller companies, startups to raise capital. I think that overhang going away has been absolutely great. I think that's a great sort of measure in the right direction. We've also seen the rate of corporate tax for foreign companies go down. Interestingly, this only means that, foreign companies will now be encouraged to set up branches in India. I think that's another sort of welcome step. But I think one big miss in this direction has been not giving an extension to that concessional rate of tax of 15%, which was available for manufacturing companies. I think that had a sunset clause which ended on 31st of March 2024. And there was an expectation, and a very valid one, that this would get extended, because we all know manufacturing is one of the larger job creators. And one really expected that that would happen, but unfortunately, we've not seen that happen.
Pallavi, if I can just also ask you to, maybe give your comments on, ease of doing business. Is there enough there? Just very quickly.
Oh, absolutely. I think ease of doing business again has been on the agenda of this government for a while. So it's not something new, but I think what we're seeing is a lot of steps in the right direction. Whether it's the Jan Vishwas bill that they're proposing, which is actually a push to the previous Jan Vishwas Act, where they're looking at decriminalizing a lot of offenses to create an environment of, trust in governance. I think other than that, there are a lot of things that have been, spoken about. For example, creating a integrated technology platform for expediting the IBC process. I mean, the finance minister mentioned, about how much of resolution has happened and, how many crores of rupees have been recovered as a result of this process. They also want to make corporate exit easier. So, there is going to be a processing center which will allow easier corporate exits. You'll be able to wind up LLPs. They want to strengthen the debt recovery tribunals, again, to sort of, make this whole ecosystem more robust. I think some of the more interesting thing from a pure tax play perspective, have been things like in individual tax returns, one was required to do a disclosure of your foreign assets. And sometimes it was so silly that, if you didn't report a 5 lakh rupee deposit lying in a bank account abroad, you would get a 10 lakh rupee penalty under the Prevention of Money Laundering Act. I think they've now increased that limit to 20 lakhs, which makes it a little more sane than being at 5 lakhs. And I think additionally, the fact that they've increased all the limits for escalating litigation. Just to sort of explain that a little better, one of the biggest litigators, incidentally, is the government and the tax department itself, because, it's very funny, but, the ITAT will not accept the order of Commissioner Income Tax. Until they go to High Court, there is really no resolution, for an individual or a company. What they've now done is they have made those limits for the government to litigate, which is basically the tax department to litigate, fairly reasonable. So, for example, for ITAT matters, it's 60 lakhs. If you want to go to the High Court, then, what is involved in terms of tax recovery should be at least 2 crores. If it's Supreme Court, then at least 5 crores. I think these kind of limits add a lot of heft to this argument of wanting to reduce litigation. And I think this is hugely going to help individuals, MSMEs and startups, because really these are the companies who don't have the bandwidth or the money power to fight long protracted litigation. So I think these are all steps in the right direction.
So, Pallavi, stay with us. Sorry, Vishesh, I was going to come to you. LTCG, a lot of talk about capital markets, equity markets, but I know, Vishesh, it's very close to our heart of our themes on private capital, on how does it impact generational wealth.
Yeah, no, I just wanted to ask you, how will family offices and families more broadly look at the change in long-term capital gains? It's gone down from 20% to 12.5%, but that significant indexation benefit that was there earlier has gone away. So whatever generational assets, financial or non-financial, that were there with families or family offices, how does that change their thinking? What are any early thoughts on that?
So Vishesh, I'll just clarify. The rate going down from 20 to 12.5 is largely in the context of immovable property. So if there is a real investment in the portfolio of a family office, then they may not be better off with the 12.5% rate, because there was a significant amount of indexation that was available to your cost of acquisition. And as I said, the cost of indexation also helped you sort of stay relevant with net present value. So it sort of made a lot of sense. I don't know how the impact would really play out, because also if you look at family offices, they don't really look at trading on real estate. It's usually a part of their portfolio. It's usually for creating annuity income. It's either for lifestyle reasons or it's for creating annuity income. Very seldom do we find, while everybody looks at capital appreciation, but no one really looks at flipping property too often. So I don't see this being a big game changer, but staying with the larger theme of capital gains, yes, there has been a fair amount of tinkering, and I'd say to some extent some level of rationalization. I think the rationalization has been more in the period of holding. Earlier we had a very complicated way for some securities, for example, listed securities and listed instruments. It was 12 months. For some, it was 24 months. And for something, for example, immovable property was 24 months. And something like bullion or art, was 36 months. So now they've sort of rationalized it on the period of holding. It's largely 12 and 24. But on rates, there's been some tinkering. So, for example, listed securities, which, earlier enjoyed a concessional rate of tax of 10%, will now be taxed 12.5%. Listed securities, which were held for less than 12 months, which were treated as short-term capital gains, were taxed at 15%, will now be taxed at 20%. So there's been a little bit of tinkering up and down. I think that also makes sure that as chartered accountants, we always stay relevant. But some level of rationalization in terms of the period of holding. And I guess, Vishesh, as you mentioned, I think the one on real estate is probably the most significant one, where indexation has been done away, though the rate has come down. But it'll be interesting to see how this really plays out.
Thanks, Pallavi. I think all our family office clients and people watching, this needs to be deconstructed. I'm sure there'll be lots of questions. Thanks, Pallavi. I'm going to now, ask Krishan. We haven't talked about the big T at tax. Krishan is our tax partner. Krishan, two questions. What are the key themes that you witnessed from the FM speech towards tax rate rationalization and simplification, which could benefit the industry? Any specific hits or misses that you foresee, specifically on further incentivizing Make in India and boosting domestic manufacturing? So, big T.
Thanks, Sid. I'll take the first question first. And as we can see, this year's budget is not just a fiscal document. I would agree with the group that it's a blueprint for a transformative change, resonating with the principles of Atmanirbhar Bharat, aligning very well with the PM Modi's visionary goal of a Viksit Bharat by 2047. I strongly believe that the proposals to simplify norms for the FDI and overall investments are poised to attract global capital flows. But what I expected also was some sort of discussions around the expansion and extension of the PLI schemes as well. The government's proactive stance on FDI regulations signifies a strategic move towards the economic resilience and global competitiveness. But having said that, would I love to see some specific, announcements in relation to expansion of that budget, which has been part for the PLI schemes on both on the expansion and new sectors like toys and other, export generating markets focus sectors. However, some enablers on the Make in India and further support PLI schemes, which are specific concessions and exemptions, which have been aligned from a customs duty standpoint on specific inputs, which in the energy space, like Amit was mentioning. I think on the custom front, the rationalization activity continues to be a progressive, and a forward-looking activity. We have seen the budget rationalization purely on account of streamlining the trade process, reducing the duty disputes, enhancing operational efficiency. The reforms on custom side typically are three-dimensional. One is the reduction in the duty incidence on critical inputs and products to boost domestic manufacturing on the ones which are not abundantly available in the domestic market or which are required for further manufacture of finished products to export competitiveness. Secondly are the ones where the rates are increased to discourage imports of the products where government's intent is to provide a level playing field to the domestic players. I think that was what we saw in those announcements. Lastly, the addressing of the inverted duty structure, specifically prevalent in key sectors, to provide a boost to the domestic manufacturing on one side, and also to eliminate the working capital blockage on the other side on account of any duty costs which are blocked. I think in line with this intent, the reduction which has been proposed on various items specified to sectors like cancer medicines, mobile phone components, aqua farming, marine products, critical metals, etc., in all of these, probably the mention of the FM was on the comprehensive review of existing rate structure and further rationalizing it to ensure that we are in the right track in terms of the sectors which will provide the impetus to the government's vision of Make in India. While the Make in India was not mentioned that way, I think these moves are in relation to that. GST is not a subject matter of the budget per se, but going by the words of the FM, in the past 7 years of its operationalization, I think GST significantly looked at reducing the tax incidence for the common man, easing the compliance for the industry, marking a success for vast proportions, which we can see from the revenue collections. Giving that assurance to the industry from further enhancing the benefits, they've quoted that they will strive to rationalize the tax structure further. The theme towards GST administration also reflects the commitment on easing that compliance burden and fostering a business-friendly environment. And lastly, keeping up with the spirit of the recently concluded GST meetings, which is where the GST discussions actually take place, the budget actually has proposed certain tax-friendly and facilitation measures like extension of timelines for ITC, input tax credit, which always remain contentious, waiver of certain interest penalties, etc., under specific conditions, which are laudable steps, I would say, which are aimed at reducing litigation and operational complexities for taxpayers. Your second part on hits and misses, I think I mentioned about the steps which the FM mentioned about in terms of the roadmap on simplification and rationalization. Would have been good to hear specifics around the GST rate rationalization. The three-tier structure of GST rates is what we were looking forward to. Some announcements of the roadmap didn't happen. Hopefully, it should happen. I think the second part of that was inclusion. I think the hint was to extend this GST regime to certain sectors. Clearly, looking at petroleum products which have been kept in abeyance, I think was one of the things which the industry was expecting that would have kind of reduced the cascading of taxes in the petroleum products. I think the second one being PLI, as I mentioned already, we would have loved to hear certain specific announcements, would have probably given some roadmap to the industry on those specific sectors where PLI is playing a very important role in terms of boosting that export market as well as creating job employment. What I saw from the hits, I think from incentivization standpoint was, which we talked about, is the employment linked initiative. I think is a crucial effort to boost job opportunities in the formal sector. But at the same time, I think this incentive will also bolster the Make in India initiative, also help align with the existing PLI schemes, and also, in addition to that, income tax benefit, which are already there for the hiring of employees.
Krishan, thanks. Sorry, I'm just going to, I'm going to interrupt you in the interest of time. I've got, a couple of my colleagues. I want them to allude to some sector, and we'll come back to you, time permitting. If Raja Lahiri, our tech sector leader, Raja, tech center of development, what's been the boost for high tech sector? Any misses?
Yeah, no, thanks, Sid. I think if you always see tech is the underlying base on which pretty much growth is leveraged. I think the Indian government has been very consistent on the digital infrastructure, the public infrastructure, and basically boosting overall tech. But as I guess, as Vishesh said, we shouldn't take it for granted. I guess tech services is going through a challenge at the point of time. $250 billion, growth getting slowed. However, what is very good to see is the focus on skilling, right? I think that's the key, that how do you kind of skill the people from traditional tech to the new tech? I think that's the key, and we're going to see that operational in the times to come. The second is obviously the focus on space tech. VC fund of 1,000 crores on space tech that is absolutely future ready. And I think $13 billion industry there, the government is already talking to create that infrastructure today, which is great to see. One of the misses, I would say that the market is very high. Capital markets are the all-time high. As a Graham Thornton, we've always believed that overseas listing should be an alternative. There are so many companies there who wants to really be global. They're structured overseas. They're reverse flipping and coming back to India. Question is, can we give that alternative for them to also look at overseas listing? Of course, Indian capital markets are great. So I guess that's some of the misses I would say.
Vishesh, you want?
No, I think I entirely agree. I think at Ranthon Bharat, we've advocated that direct overseas listing for a long time, particularly for complex sectors, new sectors, which Indian markets and Indian investors may not fully yet understand. And I think it goes back to that theme that Vivek also mentioned, that our CA mentioned yesterday, over financialization. You know, when you have these many demat accounts, small investors entering markets and investing behind fear of missing out, FOMO, just imagine the impact that will have when the music stops, because the music will stop. Then there will be, God forbid, you know, some event which will cause changes in the markets. Automatically what that then does, it forces the regulator to come up and make regulations for all companies, which impacts ease of doing business, cost of doing business for everybody. And therefore, a lot of these companies require capital for their growth, and that capital should be allowed to be accessed from anywhere, not just, you know, from Indian capital markets. Our view that allowing direct overseas listing is going to limit the opportunity for our markets is misheld, and actually, you know, markets would only allow somebody to list if they are appropriate, you know, for that market. So let companies have the freedom, access all that capital, and avoid that over financialization risk in that way. So thanks, Raja, for making that point.
Vishesh, risk. I think one of the things, the miss related to technology sector, cyber security crisis. I think recent CrowdStrike crisis that happened, I think also brings to the center that, you know, what are we doing as a nation as we move more towards high tech on cyber security, crisis management. I think maybe it wasn't there, but you know, there is definitely some attention that has to be paid. And again, at Grant Thornton Bharat, it's something that you know, we have seen quite closely on how our clients have dealt with it. I'm going to now ask Naveen Malpani, our consumer sector leader. Naveen, money in the hands of the people, how is it going to boost the consumption and obviously volume offtake, which has been stagnant? Any, you know, what are the other initiatives which will further align PM's vision of Make in India, very quickly from a consumer sector perspective?
Sure. Thanks, Ed. So if we look at it from a consumer sector perspective, I think the volumes have been pretty stagnant over the last 4-5 quarters. And the standard deduction which has been announced by the FM will definitely have some more hands in the consumer. Though small amount, but collectively with lakhs of salary taxpayer, that becomes a substantial amount from a sector perspective. Also, if I look at it from a perspective of rural investment and development, FM has marked about 2.66 lakh crores. This will definitely create more opportunities for the local people and the rural people, which again is critical for the success of the consumer sector, because, you know, consumer sector will succeed only when the rural Bharat succeeds. You know, that's where the volume gains are there for the industry perspective. Also, you know, government has already announced a lot of
Naveen, we've lost your audio.
Am I audible now?
Nothing is.
Please,
please, yeah. Can you just speak a little louder?
Yeah. So also, you know, the MSPs have already been fixed, so that helps in having more disposable in the hands of the, you know, rural people. That basically makes sure that the volume picks up. If I look at it, you know, some of my colleagues have already covered aspects about MSMEs. You know, there are more than 30,000 MSMEs in the consumer sector. Definitely a welcome change in terms of the support that's being given to them. Also, if I look at it from a Pradhan Mantri Awas Yojana, you know, the government is intending to spend more than 10 lakh crores on that initiative. This will definitely help creating more opportunities from a fast-moving electronic goods consumer perspective. You know, so a boost to manufacturers of fans, lights, you know, smaller LCDs is something that we definitely look forward to. And then obviously some of the earlier initiatives that the government had taken, for example, the PLI schemes in mobile phones. You know, now it's a heartening fact to know that nearly 14% of the global iPhones are manufactured in India. And now with the reduction in the basic custom duty, I think this will make the mobile phone sector more competitive across the globe as well. And we see the positive impact of the PLI schemes that the government had announced. Similarly, some of the other aspects like, you know, the government has announced a reduction in custom duty on footwear and leather as well. You know, globally, though India manufactures 13% of the footwear, we just export 2.2% of the global requirement. Now, with this reduction, I think the industry will become more cost competitive and obviously look forward to more volume getting generated in leather, textiles, as well as jewelry business as well.
Thanks,
so if I look at
Thanks, Naveen.
Yeah.
Sorry, I'm going to interrupt you there. I think there's so many interesting things. Just want to cover. Now move to Niladri. Niladri is our partner who focuses only on metals and minerals. Niladri, the entire energy transition and growth of renewable energy is dependent on critical minerals. There was a lot said in the FM speech today. Your views, please.
Am I audible?
Yes.
Right. So thanks everyone. Good afternoon. Good evening rather. The finance minister did mention about the critical mineral mission, and I would still say that it is a mixed bag. We saw two pronouncements. One is, of course, this mission itself, but one has to remember that India already has a critical mineral center of excellence. India is part of the mineral security partnership. So we have already taken some steps. There are three important elements that they mentioned in the context of critical mineral mission. One was that they will also focus on recycling. So I think that part was missing, and that part is a new addition. When I looked through the details of the budget for the amount of allocation made to Ministry of Mines, however, it is not reflecting as of now any substantial increase. Rather, if I look at in terms of revised estimates for 23-24 against the budget of 24-25, there is actually a fall. So one really has to see how it evolves. The other point is that they have allowed or they have reduced the basic customs duty to 0% for about 25 critical minerals. And I don't know what would be the implication of that on the very high bid premiums that are being placed on domestic critical mineral mines right now. One has to wait and see. So from that standpoint, I would say from a critical mineral standpoint, not only from energy transition point of view, but also from critical minerals being an important contributor to, say, defense manufacturing, to say high-end electronics. From all this sector standpoint, I would still say that it is a mixed bag. We have to wait and see. In terms of other subsectors within metals and mining, of course, I think there are lots of positives. If I may take a minute more, Sid, I would like to highlight that government typically looks for themes. There were 20 years back, we got the theme of the Golden Quadrilateral. Then we got the theme of Sagarmala, Bharatmala, Parvatmala, etc., etc. Now, this particular budget, we see resurgence in the theme of Amravati. We see rebuilding of Sikkim, rebuilding of Uttarakhand. I think 60% of our steel goes into infrastructure. And all this actually bodes well for the sector. A lot of focus on rural roads, a lot of focus on, and steel actually is also connected to a lot of downstream and upstream sectors. So the economic multiplier of steel is very big. So it affects a lot of sectors in between and beyond. So I think the fact that there is a new theme this year for infra will ultimately play well for the sector.
Thanks.
So,
thanks, Ladri. Infra investment will boost metals and mining. Critical minerals is important from an energy transition, high-tech industry. I'm going to just ask Saket. Saket, I'm sorry we've run over on time. Just 30 seconds. You look at manufacturing and auto EV, very important. I think Niladri and Amit have covered that. But support for MSMEs and job creation. If you just have quick 2 bits from you on that.
Sure, Sid. Thank you very much. So I think 3 things which completely stood out for us as a country. One is the Honorable Finance Minister emphasizing on the research and development. There is an outlay of 1 lakh crore which has been kind of specified into different sectors. And this is completely in sync with the ARAI, or the Automotive Research Association of India, also coming out with the research and development in the EV space. This will bring a lot of private players come in part and become part of the research and development activities. It will uplift the skill development in the country. So that's one. Second, if you look at Siddharth, purely from an investment point of view in the automotive or the mobility space, and if we kind of look at the first half of the current calendar year, the majority of the investments or the deals which have happened in the automotive and the mobility space is in the smart mobility. And there are these, and this is where the startups, most of the startups are attracting these kind of investments. So Pallavi, I know already talked about abolition of the angel tax. I think this will again go a long way in terms of making sure that the right amount of investments come in the smart mobility space to uplift the automotive as a sector. And the third and the last bit from my side, Siddharth, would be, and which has already been covered by Amit and Niladri, is on the rare metals. So the abolition of the customs duty is a positive move, which will promote not only domestic manufacturing but also research and development on the electric vehicle battery manufacturing systems. So I think these are three things which completely stood out. But yes, we still happen to be a populous and a sizable agri-income based economy. Skill development will go a long way in terms of making sure that yes, we leverage the right amount of workforce in the manufacturing sector as well.
Thanks, Saket. Thanks for that. Talked about lots of sectors. Now I'm going to invite Dr. Jayajit Bhattacharya. How can we discuss the budget without an economist's views? Jayajit, welcome. You're a guest. Just your comments on a macroeconomy, and specifically, you want to touch upon education and defense. They're usually covered quite extensively, but they were not mentioned extensively. Dr. Jayajit Bhattacharya.
Right. The question is that how realistic is the budget? Where will they be getting the money from? I think the finance minister really had the luxury of fiscal headspace this time, as has been the case for the last 2-3 years. So since COVID, we have been really recovering from a fiscal headspace perspective. So the net tax revenue has gone up from 23.2 lakh crore to 25.9 lakh crore, basically an 11% increase in the total tax revenue, which has given us the luxury to really lay out all the things that has been laid out in this budget. In fact, from April to July, we have already had a 23% growth in the direct tax collection, which is quite significant, which is why the finance minister went ahead and said with the fiscal deficit will be about 4.9% of GDP. Now, obviously, it's nowhere close to the 3%, which was really being targeted before COVID happened. But it's still far, far better than most other countries and large economies in the world. So we are in a very, very comfortable situation. Now, if you look at the government borrowing also, it's really not increasing much. While the GDP is growing very significantly, the government borrowing has gone up from 91 lakh to 93 lakh crore, which is just a 2% increase, while the GDP has grown by 8.2%, and next year it's supposed to be growing at around 6.5 to 7% on a conservative basis. So all these numbers are very, very realistic. And overall, the current account deficit as a percentage of GDP is only about 0.7%. And if you look at defense, which is a number that you're asking for, it has actually gone down from 3 lakh crore last year. It is now 2.89 lakh crore. Possibly because we have tilted massively towards Atmanirbhar Bharat in defense. So the cost of procurement has gone down significantly because we are now procuring more weapons than what we were procuring earlier. That's clearly the trend, but the total budget has gone down. So the only explanation is that we're acquiring those weapons at a lower cost. And on top of it, we are creating an indomitable industry. We are now in the top 25 in terms of arms exports, from being nowhere, from almost being zero. And very quickly, we'll be in the top 10 in terms of arms exports. That helps us reduce the cost of arms creation and manufacturing. And therefore, we can afford to have a lower budget for defense while acquiring more. Having said that, every time I've been on this analysis, I've been cribbing about climate change being missed out, but not this time. I think the finance minister took on climate change head on. There was funding being provided for climate change in terms of both agriculture, where natural farming, climate resilient varieties, and so on was focused on, in terms of infrastructure for storing food, in terms of fighting climate change in Assam, Himachal, Uttarakhand, in terms of completing the Polavaram irrigation project in Andhra Pradesh, which is very critical. So a lot of changes in climate change. But the second point I always keep saying for the last 2-3 years is there was no mention of pollution. It's a one big thing that's killing all of us. We all are sitting in the midst of massive pollution. When we've got poor air, we're celebrating it because it's not hazardous air. That's something that needs to be looked at from a budgetary support perspective. And the second big, maybe silence that we see is healthcare. Surprisingly, in this budget, there wasn't much that was talked about in terms of healthcare, possibly because Ayushman Bharat has been a huge success. And the only thing that remains is to be rolled it out to the states where it has not been adopted. And therefore, overall, if I look at it from an economic perspective, all the right tick marks, a few misses that needs to be looked at, I think, in subsequent budgets or over the period of the year. And the balance, the budget balances out. It's very, very realistic. I really believe that this is an implementable budget.
Thank you, Dr. Bhattacharya. We've run out of time. We've had a very engaging conversation, lots of points of views. I'm just going to ask Vishesh, any closing comments?
No, I think everything that had to be said has been said. You've heard from all the experts by sector. I think the three words one would use to describe the budget will be directional, strategic, and aligned to everything we were expecting. So obviously there will always be some misses, but Rome wasn't built in a day. There is a clear glide path towards the fiscal deficit targets that have been set, as JG just said, an achievable budget, and a budget that will hopefully propel that conservative growth estimate of 6.5% towards the 8+% that we're now becoming more used to.
Thank you, Vishesh. Directional, well-balanced state of least unhappiness for all stakeholders. Thank you, everyone, for joining us this afternoon. And that's all we had today. Thank you very much for watching this webinar.